Hello, and welcome to CFRA's latest webinar, Working from Home as a Long-Term Investment Theme. As you'll see on the next slide, I'm Todd Rosenbluth, the head of ETF and Mutual Fund Research. I'm joined on this webinar by Dave Mazza, Managing Director and Head of Product at Direxion. Both of us are working from home with unique situations, so you'll probably hear some background noise, but we'll also tell you about the great, exciting trends that are going on in the space. Let's move to the next slide, if we may. And we'll go one further about who CFRA is and our capabilities. We're talking about ETFs and some of the underlying stocks inside the ETFs. You'll see we at CFRA have a wide range of products that we offer, from the top of market commentary and sector and industry research towards individual companies and idea generation, and helps to power our coverage of over 1,800 ETFs. On the next slide, you'll get a better sense of how we go about rating ETFs with a forward-looking approach, leveraging our fundamental and forensic accounting research. This is a forward-looking approach that looks at the risk and reward characteristics of the portfolio to understand what is driving future performance, and then we'll take into account other risk characteristics and cost structure matters as well. On the next slide, just to remind you, even though we're partnering with Direxion for this, CFRA is an independent research provider. We don't manage money. We don't create financial products that compete with our clients. We are truly an independent research provider. So you can have confidence that when we have favorable recommendations on securities, it's because we like what's inside and we like the fundamentals. On the next slide, if I may, we'll move forward to just talking about remote work trends. And I'm going to bring Dave Mazza back of Direxion in to help us talk through this. But Dave, we're certainly seeing CEOs, CIOs talking more about this being permanent, but this is not a near-term phenomenon. This has had legs beforehand and is likely to have continued legs. Am I right?
You know, you're absolutely right, Todd. What I find very interesting about the trend or theme of remote work is that certainly a large portion of workers across the U.S. and across the globe were forced into working from their homes or working from disparate locations. But if we take a step back and actually look at some of the data, and this data is from 2017 and then 2019, so well before we even thought of something called the COVID-19 pandemic, 43% of employed Americans spent at least some time working remotely. So that means 1 day a week or 2 days a week they were working from home. You know, and that's a number which is much greater, I think, than many people would expect. And then actually, if you look at just the pure data, 8 million U.S. workers worked at home full time, and that's back in 2019. So again, even before the pandemic accelerated much of the trends toward greater adoption and acceptance of remote work, there was momentum there. And now, if we look at what are CEOs saying, to your point, you know, 75% of Fortune 500 CEOs say they're accelerating technological transformation. If we look at the most recent earnings season, particularly from S&P 500 companies, 60% of those companies are actually planning to increase their technology spend relative to what it was before the beginning of this year. So where money is going, where reinvestment is going at the corporate level, is going toward technology, going for the ability to empower workers to be productive and collaborate wherever they may be. And now, if I use the most recent PwC CFO Pulse survey, and for those unfamiliar with this survey, for many years, PwC has been going out to a large range of CFOs from companies large and small across the country. 54% of them said for roles that allow it, they're going to make remote work a permanent option. It's even higher in financial services, so 61%. And you know, again, the reason for this is that many of those companies historically were those that, you know, needed everyone in from proverbial 9 to 5, sitting at desks, and however their culture may have been situated. They're again finding that for certain roles, productivity actually has increased. And now, of course, there's trade-offs with that, but you know, it's, to me, very interesting that adoption has been coming from, you know, we know the big technology names are not planning to have their workers come back to the office anytime soon, but this is much wider than just some of those household names like Twitter or Alphabet, etc. And again, if we look at what are people actually saying, of course, large increase of respondents to surveys saying that they are actually working from home during the pandemic, which of course for most people probably would appreciate that already. And if we actually move to the next slide, we can kind of again take a look not just from the top down, from the macro point of view or from the C-suite point of view. Well, but what are employees saying, or what do they prefer? And so there was a recent study. Actually, I should say from a few years ago. Again, I think it's important to reference some data that is, on one hand, you could say dated, but tells you the trend was already in place. It was focused on millennials. Millennials are one of the largest cohorts of workers in today's economy. Actually, if you look at Gen Z, the generation younger than millennials, in fact, they're larger. But 43% of millennials are already enabled to work remotely. 75% of them prefer to work remotely. And in fact, I think this is most interesting, 80% of them would turn down a job offer relative to another one if non-flexible work wasn't allowed for them. So again, this is a top-down and bottom-up phenomenon where from a lifestyle decision, from a demographic point of view, there's significant momentum toward more flexible working arrangements. And then lastly, if we go to the next slide, from what are some of the trends that we're seeing, it's actually good for business too. So, it's all well and good to hear what CFOs are saying or to hear what, everyone joking about millennials as a group say, but, of course, older millennials born in the early 80s, they've been working for some time now. They're not just your avocado toast eating generation. They have families, they have children. They've been employed through an interesting environment. But again, it's good for business. So when you actually go out, and this is globally, 65% of businesses say that flexible work gives them the ability to reduce costs, manage their risk, and actually consolidate. So it's good for their bottom line too. And again, we often, at least in this market, we've been thinking it's an either-or decision, meaning everyone's at home or everyone's in the office. This is more about flexibility. It's more about integrating the technologies that are going to empower, further generations to be as productive as possible. And, again, they're finding productivity has actually increased. So, this quote from Mark Dixon, who's the International Workplace Group's founder, I think is really relevant. It's that, just being in the office, belly to belly with folks is really a thing of the past. I think both from what we've learned from the different integration of workspaces, that work has evolved. Society has evolved to appreciate different types of working, different types of working arrangements, beneficial for working parents, working mothers, what have you, people caring for their parents. It just makes people feel more comfortable and more empowered to actually be as productive as possible.
Those are great points, Dave. And I'll highlight, we at CFRA, I think we've continued to produce over the last 6 months the same level of content, and if not strong content for our clients, while our entire research team and everybody else that's part of the effort has been working from home. So I think we certainly can be an example of the productivity that can happen, certainly within the financial services space. I want to stay on this slide here, which is just bringing it back to ETFs and specifically thematic ETFs. We've done webinars beforehand about thematic ETFs. Just want to highlight two of the key themes that are connected to this, and you'll see why in a couple of slides, but cloud computing and cybersecurity. Cybersecurity, more people are working from home on sometimes even personal laptops. There's greater risk of cyber threats. There have been more cyber threats that have been taking place. We've recently wrote about this. More technology is moving to the cloud and more services moving to the cloud. And you can see investors are really moving more and more money towards that. cloud computing ETFs gathered more than $3 billion year to date. And cybersecurity ETFs, more than $1 billion. There's an issue with one of the leading cybersecurity ETFs, HACK, that's in the process of settling a legal suit. But ETFs from Global X, from First Trust, from Wisdom Tree, that are dedicated to these themes and just these themes have been seeing strong inflows. We'll see on the next slide, coming back to the way that we at CFRA focus on rating ETFs, the importance of not just picking the cheapest ETF or the one that has the coolest ticker. And thematic ETFs are well known for having great tickers. You can see these cloud computing ETFs. Sky, SKYY, is the largest of these ETFs. We've got CLOU from Global X, WCLD, which is a Wisdom Tree ETF. First of all of them are significantly outperforming the Vanguard Information Technology ETF, which is a multi-cap tech ETF. But you'll also see the importance of what's inside the portfolio based on the disparity of those holdings. So the WCLD ETF, which is from Wisdom Tree, is up more than 50%. That's close to double the performance versus the First Trust ETF, Sky, SKYY. CLOU is in the middle. CLOU is the 5-star that's listed here among these ETFs, and you can learn more about that ETF and other of these thematic ETFs on MarketScope Advisor. But we wanted to highlight cloud and cybersecurity in particular. David, I'll move you to the next slide, which I think is an intro for you. Sorry, here's some disclosures from CFRA. Let's go through those on the screen briefly. And then Dave, I'll bring you back in. We'll move you to this slide just to talk about the 4 pillars. The work from home ETF is more than just cloud computing and cybersecurity. There's some other themes that you guys are focused on that fit in nicely, I believe.
Yeah, no, thanks, Todd. So yeah, if we move forward one slide, we can see exactly what the pillars are. So to your point, when we begin to think about what's required for effective remote work, again, let's even set aside the pandemic and health concerns and how that's progressing. At the high level, it is the cloud and cyber, right? Makes sense. So for the cloud, we need the ability for data to be securely stored and shared remotely. So one would expect companies that are creating those technologies and the ability to tap into on-demand data would benefit, to your point. And then right along with more data being stored in the cloud and employees working from their home, working from a rental, working from their mother's basement, wherever people might find themselves in this unique time, cybersecurity threats have exploded. They've been exploding for the past few years, but the opportunity, for someone who wants to be nefarious in this environment has certainly increased. So because of that, again, companies empowering cybersecurity have benefited and are likely to continue. But then if we look, what's really required of the people, right? Of you creating your research and working with the rest of your research team, your stock analysts, what have you, me developing products, working with my researchers, working with sales and marketing. Well, we need a way to collaborate. So remote work, also includes the applications that enable the ability for projects and collaboration across teams and workers to be done. So this is really about your tools. And then lastly, because this is where Zoom video will find itself into the portfolio, it's remote communication. So, the requirement for technologies like we're using today, again, which existed prior to the pandemic, but have really accelerated from companies embracing them, is, I think it's quite obvious. So I think about the pillars as what provides your air cover, your cloud and your cyber, and then what's your day-to-day. And so these are all the tools that we're using on a daily basis to connect with our coworkers. If we go to the next slide, and this is kind of quite simply what the fund we developed to combine all those pillars is. It's the Direxion Work from Home ETF. It seeks to track the Solactive Remote Work Index. And so we really view this as a potential satellite holding for a wide range of portfolios to complement what folks may be doing in broader core positions, to target the exposure to the companies that are going to stand to benefit from this increasingly flexible environment. So again, this fund is comprised of 40 stocks, 10 stocks from each of those 4 pillars. The next slide details this a bit more. More specifically, it's 40 listed securities and ADRs in the U.S. market. Of the 4 pillars we talked about, so your remote communications, your cyber, the document management, and cloud. But what's interesting here, and again, for any index, and I think Todd, you focus on this more than anyone in a good way. It's, you have to know what you own, because the particular individual securities are ultimately what's going to drive performance of this ETF, of any ETF. In this case, as opposed to using just simply revenues or an active approach or another means, we decided to do something a bit different. So the fund security selection is really powered by something called natural language processing. Big word, but simply put, it's a tool to allow the methodology to take a significant hundreds of thousands, millions of pieces of data, to whether those are actual annual reports, the business descriptions, news, to identify the right companies for inclusion in the portfolio. Because we want to focus on, in this particular case, not just the obvious technologies, not just your Zoom video, or on the cloud side, Amazon and Microsoft, but we want to know the companies that are selling technologies to those other companies as well. So using something which is a bit forward-looking, we really found to be beneficial when developing this particular approach. But what we do, importantly, is we equal weight the names in the portfolio at their semi-annual rebalance, because we purposely want to have companies both large and small in the portfolio, established and emerging, but we want to do so, again, in a way that's going to capture that wide, again, 40 securities, but that wide section of your obvious names and those that might be a bit less obvious to everyone when it comes to powering remote work on a going forward basis.
Yeah, well, let's jump us to the next slide here, which I think goes a little bit deeper. I think folks are going to recognize some names, either because they're large caps like Microsoft and Amazon on the top left, or Zoom, which I think has been the poster child for remote communications. But let's just talk through some of the other names that have made it in and maybe why.
Yeah, no, exactly. Happy to do so. So again, to your point, on the cloud side, it's probably quite obvious because they're the largest providers to have exposure to Microsoft and Amazon and Oracle and IBM. On the cyber side, some of these names are becoming household names: Fortinet, Okta, Palo Alto. But there's also some smaller names in here, like Elastic, which is also a really interesting cybersecurity company. On your project and document management side, here, a name like Alphabet's in the portfolio because their G Suite, whether that's Gmail or their other technologies, has seen explosive growth. Large portions of revenue for Alphabet, which has a wide range of businesses, is coming from that suite of products. But also really, companies that were like Slack Technologies, which really was, smaller companies were using it, but now much larger companies are embracing Slack and understanding that if people are in, some may be in the office, some may be in their home offices or in different places, it's a great tool for collaboration, and everyone can be sharing documents and not just relying on email or text messages, what have you. And then to your point, on the remote communication side, of course, Zoom Video has had exceptional performance. Everyone and their mother and their mother's brother is using it both for work and for personal. But there's also a name like Twilio. More recently, Twilio has gained some attention, but this company provides the technology that a large portion, a significant number of other companies use. to send you those SMS messages when you, whether it's a doctor's appointment, whether it's logging on to your bank account, what have you. Make those automated voice calls. Or now more recently, with their partnership with Comcast, providing the ability for a technician to do work virtually. As you know, sometimes it's as simple as pressing the red button versus the green button. And now somebody doesn't have to go to your home. One, maybe it's safer in regards to a health point of view, but it also just might be more efficient, both for you and for the company to have that. So, Twilio is a really interesting name that might be less obvious, of course, in a Zoom video, but really, again, helping empower the ability for both companies and individuals to be as effective as possible during these times. So if we go to the next slide, we can kind of see how does this portfolio look. So just spend some time talking about the names. We know that there's some mega caps in here. There's also maybe some names that folks are less familiar with. Well, we know some of those names, again, Zoom Video or more recently Twilio have had some exceptional performance. Well, they must be extremely richly valued, right? That would be the obvious question and pushback. Relative to the S&P 500, if I look at a price to earnings ratio or a price to sales ratio, certainly not inexpensive, but compared to the NASDAQ, which again has been in many ways the poster child of this market recovery, they're actually on a price to sales basis in line or slightly less. But what's most important here to me is both their potential earnings growth, which is closer to 20% than the NASDAQ's 13%, but also their most recent historical sales growth, coming in at 18% versus 13% for the NASDAQ, which is greater than the S&P 500. So very much a tech-heavy portfolio, very much a growth-oriented portfolio. But if I think about, a old school PEG ratio or other approaches like that, per unit of value, you're getting a lot of potential growth in this portfolio, plus companies with extremely high growth margins. And at the same time, with certainly a lower return on capital than you're going to find in the S&P 500, but not significantly lower, even when you have some companies that are more nascent or smaller in cap with emerging revenue streams. So again, these companies at the cutting edge of societal change actually have maybe more reasonable valuations with extremely strong margins than people might have come to expect.
I'll jump in here if I can, Dave, and before we move to the next slide, to just say we at CFRA, we are not currently rating WFH. The fund recently launched. We typically start covering an ETF within 3 or 4 months of its history, but we don't have a risk and reward assessment of the portfolio. But we do cover obviously many of those names that we saw on the prior slide. Amazon and Microsoft are buy and strong buy recommended companies. We're covering Adobe, we're covering Fortinet, we're covering Zoom, we're covering many of these companies from a qualitative analyst opinion stars, and where we're not covering it, there's quantitative research as well. So if our attendees want to use that prior slide to be able to just understand these companies a little closer, the tools that are on Market Scope Advisor can help, even if we're not rating the ETF today. We will be in the near future based on our quantitative methodology. I'll move us to the next slide, which I think is you're going to speak to as well. We touched on some of these holdings, but I think it's just important also to know, even you mentioned the equal weighting approach to it. So a cap-weighted approach would have Microsoft and Amazon being dominant within the portfolio, given how large they are. You get a nice mixture of large cap with Zoom in the top 10 holdings, but also some small cap companies like Seago and others.
Yeah, no, that's a great point, Todd. So, at present, the largest holding is actually Twilio. I spent some time a few moments ago diving into that. But the other, I think what's really interesting about this company is, as we know, New York and New York City has, done a really remarkable job with addressing, some of the worst of the virus that we saw in the U.S. and hopefully that continues. But on a going forward basis, one of the most important elements to their plan is contact tracing, which has been used with success in other countries. But Twilio is actually the name that's powering that. they're actually the company building that tracing system, building that platform. So to your point, you're going to see larger names, you're going to see smaller names in this portfolio. Another name which is a lot smaller even than Twilio now is an Inseego. And what Inseego is doing is, they're actually helping to power the 5G rollout as really their clients move from trialing it toward implementation. So this is less about buying a 5G phone. It's more about providing the services to make that actually happen and make the speeds of which we can communicate in our data be much faster and more effective. So again, these names all have really interesting elements with them. And lastly, I'll touch on the company that I briefly mentioned, Elastic. And really what Elastic does is all cloud-based software, but it's actually, what they developed is it's a self-service platform that takes in big data. So imagine I'm a company and I'm a manufacturer, what have you, and I have significant amounts of data on the effectiveness of my supply chains, the effectiveness of my production, what have you. All of that, or even the cyber threats that are going on with that, they help take all that big data and make sense of it for companies. So it's really application software, but what they're doing all on the cloud is extremely innovative and extremely helpful for companies. So what I find very interesting about this particular portfolio is, again, it runs the gamut from large and small, household names to non-household names. All of them in this day and age are really empowering this transformation that we're seeing toward greater acceptance and adoption of remote work, both, again, at the corporate level, but also at the individual level.
Great. Well, let's move us to the next slide, which I think heads us towards just a disclosure, and this ETF being so new that it's not showing a performance record long enough, but it will get there, and we'll be covering it. Let's move to the next slide here. If I may, we're going to go through some disclosures. I'll take the opportunity here while we go through a couple of disclosure slides to invite the audience to submit some questions. We've already gotten a couple of them, so I'll get to those first, but please submit questions. We'll move to the next slide here, which is, I think, another disclosure slide from Direxion, which is understandable, and then we'll move again, which will just show the Q&A. So Dave, I'm going to start with the question here for you. I think you touched on it earlier, but I think you, almost everybody on here is certainly looking forward to a coronavirus vaccine being successfully adopted in 2021. Do you think that this phenomenon of working from home is short-lived, or does it have legs? This is a longer-term theme as opposed to a short-term trade.
Well, that's certainly the question mark on everyone's mind. But what we have seen is the longer this pandemic has played out is more and more companies, some of them who you'd never think of embracing the ability for the ability for workers to be productive at home and be effective at home doing so. So of course, one would think tech-enabled companies like Alphabet or Twitter or what have you would have no issues with their employees working in different locations. But financial services companies, most recently Schroders come out and have adopted for certain roles, remote work flexibility and perpetuity. I think, again, this has been a massive learning for the C-suites at companies. I also believe that there's a role for the office. The role for the office is collaboration and creativity with the team, but for individual focus work, meaning work that needs to be done at an individual level, it might actually be better done at home. And that's what people are finding. Personally for me, I've been with my wife who also works and our two young girls, and I thought at the beginning I was very concerned about the potential, but again, I've found for certain tasks, I've been much more productive in my home environment than I was historically sitting in front of my screens in an open air environment in the office. So I don't think it's going to be short-lived at all. Certainly, we may see in the future where I think we're just going to see a greater balance of. So again, it's not going to be an either-or decision. And what we've seen with investors have embraced this ETF. We launched it, less than 2 months ago, and it's, now close to $90 million, trading a significant amount on a daily basis as investors realize the potential that these companies have from accelerating the future and bringing the trends that may have occurred 10 years ago, into the forefront today.
Thanks for that. So I'm going to take the first part of the initial answer to this question, but I'd love your take on this as well. Are we, as an industry, we as investors, likely to see more ETFs tied to some of these themes? And so I showed on a prior slide about the range of cybersecurity ETFs. There's 4 or 5 or 6 of those products. Cloud computing, there's 4 or 5 or 6 of those. We don't have anything dedicated to document management or remote communications, although we'll certainly see some of these companies. Zoom happens to be in some of these cloud computing ETFs, even though it's not a remote communications ETF. The asset management industry does a great job of seeing a trend that has some legs behind it, or hopeful legs, and launching products. And that's going to be a great thing from an investor standpoint to compare and contrast the exposures. Fees typically come down when there's a second or a third entrant into the marketplace, but there's also areas that have not been tapped. So this is where, Dave, from a product management perspective, is this just the beginning for Direxion from a thematic perspective tied to this broader space?
Yeah, I think I would agree with you broadly. I think one of the interesting trends that we've seen in the ETF industry this year is there has been disruption, not just from a market point of view, but from an opportunity point of view that investors are seeing. So of course, the sell-off and the subsequent recovery has really created a bifurcation of certain companies. And I do think, this year and in the future, thematic ETFs are going to continue to make a lot of sense in investor portfolios. It's been a long while where investors were focused on just finding the best growth ETF, best value, small cap, mid cap, bolting together the portfolio like that. To me, it's about, building and addressing the particular outcomes and trends that people are seeing. And of course, one of them is remote work. While I can't provide significant detail, we've filed for a fund, Direxion Connect Consumer ETF, that really embraces the fact that the pandemic has also accelerated other trends, such as trends toward how we consume. And consume is not just buying things online, but it's how we live our lives, whether that's keeping ourselves fit from a health perspective, whether it's communicating with our friends and family, or even how we educate ourselves. So I firmly believe that, again, what this pandemic has done is it really accelerated the future in many ways across a wide range of industries. One of the most obvious is the greater acceptance and trend from a societal perspective of remote work, which, to my earlier points, were already there and is now just beginning to grow. But we're also going to see this in other areas of our day-to-day lives as well.
Thanks, Dave. Thanks, everybody, for submitting questions in the interest of not only time, but also since we're all working from home and probably only blocked out so much time on our calendar before the kid, the dog, the what have you shows up. I'll move us to the next slide, and we'll follow up with any questions. Hopefully you've been joining us for our Wednesday webinar series that our equity research team at CFRA has been doing on a bi-weekly basis. We got really great responses to the prior webinar that we did, which happened to be tied individually to some of these pillars that Dave was talking about. We've got one coming up next week related to healthcare and the therapies and investing in the medical landscape that I think is a great follow-up. It's top of mind. It's going to have our healthcare team. And then in September, we've got a couple other ones tied to infrastructure and real estate, which hopefully is going to recover from the abyss. On the right-hand side, if you're not currently using MarketScope Advisor, or perhaps you're getting a feed of our research, but you want to just see what else is out there, I encourage you to visit that site. Let us know if you'd like to trial it, if you're not currently using it. I published a thematic research piece on work from home as an investment theme, laying out some of the topics that Dave and I have talked about. You'll also have in the handout section here the slide deck, which hopefully you'll be able to make great use of. I'll move us to the next slide here, which is just a thank you to you for joining us for this. A thank you to Dave and Direxion for partnering with us at CFRA about this, and hopefully you'll join us for upcoming webinars going forward. And I believe a survey will pop up as soon as I finish speaking. We'd love to know what you think and what we can do more of, and we'll move to the next couple of slides if there's any disclaimers and disclosures we didn't get to. But thank you very much for tuning in. Have a great rest of your day and rest of your week. Bye-bye.